A question from IFRS 15. I took it from past exam paper. This is actually from DIP IFR exam paper. This DIP IFR and SBR, they are at the same level. So I'm usually switching between the content. Some content I take from SBR, some I take from DIP IFR. This is actually about IFRS 15. One thing which of course, I explained in my IFRS 15 lecture, but last time when we had the session, I did not highlight that. That topic was allocation of discount. Sometime when you sell a product, you sell it as a bundle. For example, a product and the warranty, like the service. And you have to split the total contract value between the two performance obligations. One is, for example, when you sell a vehicle, when you sell a car and you charge $30,000. So actually you are giving the car and you are giving probably a 3-year service warranty. So $30,000 is not the price of the car. $30,000 includes the price of the car as well as the fee for 3-year service warranty. And we know that the car, the vehicle, when you deliver it, your performance obligation is achieved. So you can recognize the revenue which is related to the car. For example, let's suppose $27,000. But the $3,000 which is related to the service warranty, that will be over a period of time. Like we discussed last time, that performance obligations at point in time, performance obligations over a period of time. So the service revenue you will accrue and you will recognize it over a period of 3 years. So this is a very common treatment of splitting the total contract value between different performance obligations. But then there is another issue sometime they give, and that is the issue of discount. So they give you some discount. For example, the car is 27,000, service warranty separately is 3,000, together it should be 30. But then you sell the car with warranty for 29,000. So you are giving $1,000 discount. So this $1,000 discount should be allocated to both performance obligations in proportionate. I mean, of course, car is 27, service is 3, total is 30. So $1,000, how should I split? I should be splitting 27 divided by 30,000 multiplied by 1,000 discount. This much of discount should go to the car, and 3,000 is service warranty. The total is 30,000 multiplied by 1,000. So this much of discount should be charged to the service warranty. So it will make like the car price will become, the discount which you give on the car will become 900, and $100 discount should go to the service warranty. So service warranty, and I mean, previously you had standalone prices like 27,000 and 3,000. But now after discount, you should be saying that the price of the car is 26,100 and the discount is 2,900. Total, I'm selling it for 29. So actually they were together 30, but you sold it for 29, and that 29 will compose the vehicle and the service warranty discount allocated in proportionate thing. So this is one concept, which was, I just explained it as a concept. Now what we need to do, we need to apply it in a question. So this is a question, quite interesting question. Let's read it together. Requirement you do not see here because there were several parts A, B, C, D. Requirement was that show the financial statement, the treatment in the financial statements. So I'll read the question and we will mark the question together. It says that on 1st October 2013, Delta sold a machine to a customer for a total price of 500,000. Total price 500,000. Delta invoiced the customer for 500,000 on 1st October 2013, and the customer made a payment of 500,000 to Delta on 15th October 2013. So you received the cash as well. The terms of sale included an arrangement that Delta would service and maintain the machine for a 4-year period from 1st October 2003. So you are giving 4-year service warranty. Delta would normally charge an annual fee of 37,500 for a service and maintenance agreement of this nature. Annual fee of 37,500. The normal selling price of the machine without a service and maintenance arrangement was 450,000. So standalone price for the vehicle for the service is 37,500 per year. The saving available to customer as a result of purchasing the machine and the service and maintenance arrangement should be allocated to the two components of the transaction in proportion of their standalone fair values. So they say that it is 1st October 2013 and their end of the year is 31st of March. I'm just making it myself, okay? 31st of March 2014, which means 6 months period. I'm just taking that you prepare your financial statements on 31st March 2014, which is 6 months later. So the first thing what you need to do in such a situation, now this is an IFRS 15 very typical question. The first thing which you need to do is that you need to find out that how much discount you are giving. So you say that standalone price of machine. So standalone price of the machine is 450,000. And then you say service 4 years. So 4-year service, 1-year service is 37,500. And you multiply it with 4 and you take it here. So it means that if you sold these two things individually, you would have sold them for 600,000 in total, okay? So this is the prices. These are the prices if they have been sold individually, independently. But you sold them, sold for 500,000. You are making a net amount of 500,000. So it means that there is a discount of $100,000. So this discount allowed $100,000. We should be allocating this discount to between the two components. Okay. So how should you charge the discount? I would say that discount allocation, and I would call it to machine and to service. You know that the total price was 600,000, okay? And out of 600,000, 450 was machine. So your formula should look like here. How you should show it for machine, it should be 450 divided by 600. I'm just eliminating 3 zeros. There is no need. In fact, I can do also like 45 divided by 60. It will give the same answer. Multiplied by 100,000. This is the discount for the machine, and for service, you would have 150 divided by 600 times 100,000. So let's see how much discount we have given on the machine. So 75,000 we have given discount here, and actually 25,000 discount has been given there. So total discount we have split. Now we can say that let me put it, actually I could have done it in a better format, but let's do like this: 450 and service is 150 and discount is 75 into -1, and here the discount is into -1, and I can say that the net revenue which you can consider is like this. So your 500,000 actually it consists of this number. So final price, the final price for the, I mean within 500,000, actually the 500,000 which we are receiving, the final price which we charged for machine is only 375,000, and which we charge for service is only 125,000. So this is, here you should make like when you sold it on 01/01/2013, 01 10 2013, I mean the date when you sold them, you should be saying, you know, debit receivables, which is 500,000 because you invoice at 500,000, and you would say, you know, credit revenue, which is 375,000, and you would say credit deferred revenue. Deferred revenue means advance revenue, advance income, and that is your liability. So this is what we are putting at. So on 1st of October, 375,000 is treated as revenue. 125,000 will go as your liability, as your deferred income, because you have not yet provided the service. This performance obligation has been achieved. We have delivered the machine. We can recognize the revenue. This performance obligation has not yet been provided, so you cannot recognize the revenue. Receivables, you will claim full. Receivables, you will make invoice 500,000, that's not the issue. But you need to create advance income, which is your liability. So one of the major differences between GAAP and US GAAP and IFRS is that GAAP is rule-based. IFRS is principle-based. Rule-based means that GAAP gives you exact instructions what to do, step by step. GAAP is a detailed document, something like 18, 19,000 pages. And it has like, just like in your legal law, you have clause 45.1, 45.2, 45.3, and you say, I take this action according to 45.3, like your tax code, like your criminal code. This is how GAAP works. IFRS does not work like this. IFRS has given you certain principles in its conceptual framework, like the principle of prudence, which is now they have taken away, or substance over form, or you have, consistency, you have fair presentation, you have materiality, you have completeness. These are the principles which they have given you. And you have to take decisions. Listen, IFRS, when you are doing financial reporting, and especially when you say strategic business reporting or corporate reporting and application of IFRS, you should understand that IFRS tells you few things, and then a lot of things they expect you to do. For example, they say presentation should be fair. But what do you mean by fair? Is there any definition of being fair? So IFRS says that, ISB says that if you follow IFRS, what financial statements will come out, those will be fair. So if you follow the IFRS, what you will get, that would be fair. This is the definition of ISB. They use.
Sir, I think that defines that transaction should be representative from its commercial substance, from rather than a legal substance.
No. That is another principle. That is another concept which says substance
Okay,
over form. Substance over
exactly.
form is another concept. Like fairness is not only with substance over form. Fairness is with
Fine.
many other things also. The substance over form is also one of them. Then IFRS uses many open terms. Like it says, like for example, in this period, if you ask me this question, when should I discount? What is the time period if the customer pays after, okay, let's suppose customer pays after 1 year and I have to discount. What if the customer pays after 11 months? Okay. What if the customer pays after 11 months? It's not 1 year, but it is almost 1 year. So at 1 year, I should be discounting. But 11 months, should I discount or not? IFRS, actually what they have done, they give you some open terms like substantial period of time. Now, what is substantial period of time? You have to decide yourself. IFRS uses a word significant. Now, what do you mean by significant? You have to decide, because significance changes in different time periods. What is significant today may not be significant tomorrow. IFRS says material. But how do you measure materiality? What is the limit or amount for materiality? There is no clue about that. You have to decide. So when you are applying IFRS, there are two things. One is the knowledge which is given in the standard, and the more important thing is the judgment of the manager. We say judgment. So IFRS, they are applied with the judgment. Like I always say a very simple example, that IFRS always it tells you that, if somebody is sick, you must take him to the doctor. That's all. But which doctor? That you have to decide. If you think that he needs a cardiac surgeon, take him to cardiology. If you think that he has some, not heart problem, but he has some other problem, ENT, take him to ENT. But IFRS only says take him to doctor. Or IFRS says take him to doctor as soon as possible. Now, what does as soon as possible mean? IFRS does not define it. Now, if the person is bleeding, blood is coming out, as soon as possible means now. But if the person has some fever, maybe you can wait tonight and tomorrow morning you will go early morning and you will go to doctor and you say, I come immediately first thing in the morning, because then going in the morning is as soon as possible. So application of IFRS has two components. One is the conceptual framework and the standard itself, the knowledge which is given in the standard, and one is the judgment at the time of application. So this is the reason why IFRS have become so popular, like they are being accepted in 170 countries in the world. It is so rapidly growing. It is so rapidly growing. Every country is jumping on the boat, because IFRS, it ensures flexibility, adaptability during the time of application. You cannot apply GAAP. GAAP is very rigid. GAAP says do it like this. In your particular economy, in your particular business environment, it cannot be done. It can be done in America, but it cannot be done in Nigeria, or it cannot be done in Pakistan, or it cannot be done in India. So IFRS adapts itself. The flexibility is the beauty. You have to do the judgment. I come back to your question. Yes, if it had been a time period of 1 year or more, I would have or should have discounted it and then split the discount. Are we clear?
Yes, sir.
Sir,
Yes. Okay, then comes, this 31st of March 2014. This is your closing period. When you are preparing your financial statements, this is your reporting date. And on reporting date, I would say that 6 months lapsed, okay? 6 months have lapsed, 6 months completed. So 6 months of this deferred revenue, you can recognize as in your books. Now it is time to recognize the deferred, the service revenue. So I would say that 6 months lapsed. So recognize part of service revenue. So you should be saying debit deferred revenue and credit revenue. So now I'm crediting revenue again, a little bit of revenue I'm taking in. How much I would do? So this is like, total service revenue is 125,000. You divide it with 4 years. So it is 1 year multiplied by 6 divided by 12. I do it for 6 months revenue. So 6 months of service revenue I am booking here. So now on 31st of, I can say that on 31st of March 2014, total revenue with respect to machine and service recognized. Total, how much I have recognized now with respect to machine and service? I would say that machine we have recognized this much, which is 375, and service we have recognized just this much, which is 15. So this is what you are recognizing in your financial statements. And on 31st of March, you have a liability, okay? You have a liability. You have a liability of deferred revenue. This service revenue liability, how much do you have? So your total service revenue was 125 and 15,625 you have taken in your books. So I put it here. So this is my remaining liability. Okay, 109,000. 109,375 is your deferred income remaining, because initially you credited it 125, but then you made a debit of 1,500,625. So your outstanding deferred revenue, which is your liability, is 109,375. But you should not stop here. You should not stop here. You should show it as current liability and non-current liability. It is very important. It is very, very, very important that whenever you have a liability, total liability, always split it between current and non-current. It has marks. If you do not split it, you will lose marks. So how much is current? Current means 1 year. So my 1 year service revenue was 125 divided by 4. For the next one period, this is my current liability, 1 year service revenue. So this 1 year is 31,250. So total is 109 minus this 3125. This is my non-current. So this is my total, but I must present it properly. And the proper presentation means that I split it between the current and the non-current portion. Current is only for 12 months, okay? This is full year. 15 was 6 months. 31 is full 1 year. And the remaining part will be your, how to say, non-current liability. Okay, we'll stop this topic revenue here, and I will upload this thing also and make it part of IFRS 15 section. You should remember that in SBR, you never, I mean, possibly it's almost impossible. You would never get a question relating to one standard only. I mean, when you were in F7, you see a question which is related to investment property or probably IS 16, tangible non-current asset, or maybe IFRS 15. This was happening in F7 level. But in SBR, they have got only 4 questions, and they do not want to test your knowledge only on 4 questions with 4 standards. Actually, every question involves 3-4 standards or 2 or 3 standards minimum. So you should be able in exam to understand that which standards are related to this question, and multiple standards will play a role in every question. Now, why I'm saying this? I'm saying this thing now because I said that I'm going to stop IFRS 15 here and move forward. But it does not mean that we will not touch it. Because when I will be doing deferred tax, I will be referring back to IFRS 15. When I will be doing leasing, lease and sale lease back, again, we will touch IFRS 15. So I'm stopping IFRS 15 as a standard now. But as we will do questions from other standards, certainly IFRS 15 will again be discussed. So we will be discussing and talking about this standard in future as well. It's a very important standard. And if you ask my opinion, for me, this is the most important standard because you have got 5 financial statements. And the first financial statement which you make is income statement. And in income statement, the first line is IFRS 15, your revenue. The first line. I mean, the process starts with IFRS 15. Everything comes later.